Alright guys, good afternoon, good evening, wherever you're watching this video from. So this is another video on principles of accounts paper 2. This is actually 2024. You can check out the previous video. I actually solved the 2025 paper. Please subscribe to the channel for more content like this. So let's get into it. So the first question reads, state the source document Mrs. J. Perry would use to record each of the following business transaction in his books of accounts. So the first one reads paid shop rent by cash. So this one, the source document is first the original book, the book of prime entry that would be used here is the cash book, and then the source document of the cash book is a receipt. Then for the second one, bought goods from J. Biller on credit. So here is buying goods, so it's simply like you're buying from the supplier so that you have more goods in your business. So the the book of prime entry being used here is the purchases day book. So the source document for this is the original invoice. Then we head on to the third one, returned goods to J. Biller from for 1,300. So here the book of prime entry being used is the purchases returns journal, and the source document for it is the original credit note. Then we head on to the last one, which said paid J. Biller by check in settlement of the amount owing. So this one is also a receipt. And then B reads, P. Mukomba commenced trading on 1st January 2019 with the following assets and liabilities: cash 8,500, bank 11,000, motor vehicle 10,500, and loan from Kaba, which was 6,000. Were required to prepare P. Mukomba's opening entry in the general journal showing his capital as at 1st January 2019 with proper narration. So we open up the account, comparing the general journal here. So I follow the debit, credit, and your details and your date. So we start, we say assets. So we first start off by collecting the assets that we have, then we'll subtract the assets from the liabilities, and we'll subtract the liabilities from the assets, and from there we'll get our capital figure. That's how the general journal is actually done. So the title will be P. Mukomba's general journal as at 1st January 2019. So the assets that we have here, we have cash. The cash is 8,500. We have bank is 11,000. We have motor vehicle is 10,500. Okay, and those are all the assets that we have from the given information that we have. Then we add them up. So we have 8,500 plus 11,000 plus 10,500, which should give us a total of 3,000. Then we say liabilities. So the liabilities that we have, we only have a loan which is going at which is stated right here, loan from Capital, which is 6,000. So 6,000, and then you subtract 6,000 from 30,000, which will give you 24,000. This will be your capital. And this is the capital for 1st January 2019. And that's just like that. This is how you actually prepare the general journal. Thank you very much for watching. Then we head on to C. On question C, we're required to prepare a trial balance, and the question reads: the following ledger accounts and their balances were extracted from the book of M sample on 31st December 2020. So we have capital, land and building, furnitures and fittings, cash at bank, accounts receivable, accounts payable, electricity bills, rates, purchases, sales, and provision for bad debts. Then we actually have an additional information which reads: the office furniture of 12,500 bought on credit during the year from Simba Furnitures Ltd Limited was not recorded anywhere. Record the transaction in the appropriate account and include them in the trial balance. Required: prepare surplus correctly headed trial balance. So this one, we'll first open up a table. And then the date column. And then first of all, we say that we deal with the additional information. So in the additional information, the two things that we'll mostly concentrate about is the office furniture and the credit. So we'll say office furniture, and then credit. The normal balance for office furniture is debit, and there was an increase here because you actually bought more. So the office furniture is 12,500. 12,500. So debit, credit, details, debt. So the title will be M Sparrow. M Sparrow's trial balance as at 31st December 2020. So we'll first start off by putting this transaction. So look at this: credit is going together with the accounts payable. So we're going to say credit, but we'll open a bracket and we'll go on the accounts payable. The accounts payable is 4,866. Then you add it together with the 12,500, which was in the additional information, to get your actual figure for credit, which will actually result into being 17,366. Then we'll head on to our office furniture. So sorry, the office furniture will go together with the furniture and fittings. So the furnitures and fitting are going at 9,900. So 9,900 plus 12,500. So we'll add them up. 9,900 plus 12,500, which will give me a total of 22,000 and 2,400. Yeah. Then we'll start. Capital will be credited. Then of land and building, which is going at going to be debited 96,000. Then we have cash at bank, which will also be debited. Then we have accounts receivable, which are going at 888. Then we have electricity bills, which is going at 295.50. Then we have rents, which is 463.25. Then we have purchases, which is 5,398.50. Then we have sales, which is 1,683. Then we have provision for bad debts, which is 900. So our balance should be 136,949. 136,949. This should be our balance. And just like that, the trial balance is done. Then we head on to D. D actually reads, identify whether each of the following is either capital or revenue expenditure. So for the first one, purchase of spare parts for machinery. This one is actually revenue expenditure. And for the second one, installation of additional fixtures. This is capital expenditure. Repairs to office furniture. This is revenue expenditure. Then we have purchase of loose tools. This is capital expenditure. And the last one, purchase of flowers for office use, which is going to be revenue expenditure. Okay, we head on now to question 2. Number 2, sorry. Yeah, I didn't say question 2. So we have question 2a. So in the ledger, in each of the following accounts recorded, in which ledger is each of the following accounts recorded? So for the first one, it's a general ledger. For the second one as well, it's a general ledger. For the third one as well, it's a general ledger. And for the fourth one as well, it's a general ledger. Okay, then we head down to B. S. Capella buys and sells goods to D. Musango on 28th February 2020. He provided the following information in 2020. So this is the information that he provided. Then we're required record the transaction in D. Musango's account in the Capella's sales ledger and purchases ledger. So we're preparing sales ledger and the purchases ledger. So now we start it. So the title of the first one for the sales ledger is going to be S Capella. S Capella's sales ledger. And then for the third one is going to be as well S Capella's purchases ledger. So debit, credit, folio, details, date as well, details. And we start balance for the sales. So the balance that D. Musango is owing us. So balance due to D. Musango was 5,000. And let's check the purchases ledger, the balance. So the balance owed to D. Musango, the one that we're owing him, is 10,000. So this was actually taking place in February. The first one was on the 10th, second one on the 15th. Sold goods 1,901. So these are sales, which is going into 1,900. Then on the 18th, so this is February. This took place on the 10th. Then the next one for this, for the purchases, is on the 18th. Bought goods from, so these are purchases, which are going at 3,200. Then on the 20th, the balance of the two accounts of D. Musango were set off. So we have a set off, which is going to be, for in the sales ledger, you're going to add up the two. The balance, the balance 5,000 plus 1,900, which should give us, then this set off is actually going to be credited 6,900. Then in the purchases 20th set off is going to be a set off, and there's going to be also bank. So same thing also applies. We're going to add up 10,000 plus 3,200, which give us, sorry, in the purchases you actually subtract 10,000 minus 3,200, which is giving us 6,800. Yes. So our set off is going to continue to be 6,900. 1,200 minus 6,900. Okay, so to get the bank amount, what you actually have to do is add up the balance in the purchases, then subtract from the set off, which will give you 6,300. Then from there we head on the 28th. On the 28th there were sales which were 25,000. Then same as well on the 28th there were purchases which were 30,000. Then after that you just put balance, carry down, this is balance brought down, balance, carry down, then from there you add up the amount that's big. Of course it's at the debit side, so you add up the transaction at the debit side. 5,000 plus 1,900 plus 25,000, which will give us 31,000, 1,900, 31,000. Sorry, I should put the middle mistake somewhere. 5,000 plus 1,900 plus 2,000 or 25,000. Yes. One important details I actually forgot was that on the 28th, on the transaction, it seemed to have sold goods for 25,000 on credit to Dim Sum less 10% trade discount. There's a discount that I actually forgot. So meaning what's actually going to happen is 25,000 times 10 divided by 100, which is 2,500. So 25,000 minus 2,500, which is giving me 22,500. That's the actual figure for my sales. So now when I add them up, 5,000 plus 1,900 plus 22,500, which would give me 29,400. Same applies here, 29,400. Then you subtract it, 6,900. You subtract the 6,900 from the 29,400, which should give you 22,500. 22,500. And just like that, we are done for the sales. Then same also applied here. I forgot actually to remove the 10% from the 30,000. So it's going to be 30,000 times 10 divided by 100, which will give me 3,000. So 30,000 minus 3,000, which will give me 27,000. So you add up which one is bigger. The 27,000 plus 3,200 plus 10,000, which will give me 40,200. 40,200. You subtract this minus 6,900, which is giving us this, minus 6,300, which is giving us 27,000. And just like that, that's how you actually get to do this question, and it's done. We head on to C, which reads State the ideal method of depreciation for each of the following. So the first one, royalties, is going to be straight line method. And then for the second one, for cattle, it's going to be evolution method. And for furniture, it's going to be reducing balance method. Then we head on to D. So D reads Fumbi Block makes Ltd bought, or Fumbi Block Makers Limited. Fumbi Block Makers Limited bought a block making machine at 25,000 on 1st January 2021. The machine was expected to last 3 years in business. The net book value at that time was estimated to be 10,000. Were required to show the provision for depreciation of machinery account for 3 years, 2021, 2022 and 2023. So what we have to do is find depreciation first. So depreciation in this case is going to be the cost of the machine minus the scrap value over the number of years. So the cost of the machine was 25,000 minus the scrap value was 10,000 over the number of years, which was 3. So it is going to be 25,000 minus 10,000 divided by 3, which will give us 5,000 as our depreciation. You know, now we draw up our box. So for your debit, credit, details, debt. So it starts now. Profit and loss, then balance. Then this was taking place on the 1st of January 2021, and the balance will be on the 31st of December 2021. This will be balance carried down. So the profit and loss is actually the depreciation we found, which is 5,000. That's actually going to be our balance, 5,000, which will come as balance brought down at the credit side. So balance, which will be for the 1st of 2022. Then you say profit and loss. The profit and loss, like I've said, will be the depreciation. Then you say balance. It will be on the 31st 12 2022, 31st 12 2022. This will be balance carried down. So when you add up the total, it should give you 10,000. So that means that our balance carried down will be 10,000. And balance brought down as well will be 10,000. This will take place on the 1st of 2023. So this will be profit and loss, then balance carried down. The profit and loss, like I've said, it's 5,000. So this is just going to result to us having 15,000. This is going to be balance for first 2024, and then the title is actually going to be from the block provision for depreciation account. That's the title. And just like that, if you're capable of just doing this to my simple easy step, you get all your 7 marks. Okay. We head on to question 3b, which reads, the following ledger accounts were taken from LC Katongo's books for the month of September 2022. Of the sales ledger balance, the debit one and the credit one, and the other information are required to prepare the sales ledger control account. So debit, credit, folio, details, date. So we start. The title is actually going to be this is LC Katongo's sales ledger. So we start balance. The one that we have for balance is 21,747, and at the credit side of 186. Then we have sales returns. The sales returns will be credited, which is 3,873. Then we have sales. So to get the actual sales figure here, what you simply do is say 200. This is 247,163 minus the 3,275, and after subtracting, you get your amount for the sales, which is going to be 247 163 minus 3275, 243 888. Then we go to total check from debtors. Which is 229,272. Then we have dishonored check, which is 117. Then we have interest on overdue, which is 500. Then we have a set off, it's 1,600. We have discount allowed. The discount allowed is going at 10,404. With bad debts, the bad debts are going at 1,263. Then we have now balance. the closing balance. This is balance carried down, balance brought down. So the balance carried down, which is at the credit 266, and then we get 2, and just like that, that's how you prepare your sales ledger. So now we head on to the ratios. So these are the ratios. The first one requires us to calculate the cost of goods sold, the inventory, the working capital, quick ratio, net profit. And this is the information that we were given. So the first one wants us to find the cost of goods. Is it cost of goods? Yeah, cost of goods sold. So what you do here, first you will need gross profit, and for us to get the gross profit amount, it says here in the information that we've been given, gross profit is 20% of sales. So what you're going to say is gross profit is equals to how much are the sales? 300,000 times 20 over 100. How much is that? This is 300 times 20 divided by 100. It should give us 60,000. This is our gross profit. So now to find our cost of goods, we're going to say sales minus gross profit. So the sales is 300,000 minus the gross profit. This should give us how much? $240,000 is our cost of goods. Then the next B is the inventory. So this is the opening inventory actually. So for us to find the opening inventory, we'll use this formula. Purchases is equals to cost of goods plus closing inventory minus the opening inventory. So how much are the purchases? Let me just do this. So these are the sales, this is the inventory, this is purchases, capital, bank, trade payable, trade receivable. Yeah. So the purchases are 170,000, which is going to be equal to the cost of goods, which I've just found, which is 240,000, plus the closing inventory, which is 50,000, minus the opening inventory, which is the one we're looking for. I'll put X. So I'll say 170,000 is going to be equal to, that's 240,000 plus 50,000, which is giving me 290,000. So from there we'll just say X is equals to negative X is equals to 170,000 minus 290,000. Negative X will be equals to, so 170,000 which is going to give me negative 120,000 over negative over negative, give me x is equals to 120,000. So this is the closing inventory. So if you want, you can even indicate as, oh sorry, the opening inventory. So inventory at 1st April 2022 is 120,000. Then we head on to C. C wants us to find the current ratio. So the formula for the current ratio is the current assets divided by current liabilities. So we have to identify the current assets. So the current assets that we have here is the stock, the inventory, sorry, so the closing inventory plus bank plus the trade receivable and then now we only have these three: the stock, the opening, the closing stock, which is the closing inventory in other words. Then we have bank, then we have trade receivables, then we divide it by the trade payable, which is like the only liability that we have. So the closing inventory is, we start now, 50,000 plus how much is bank, which is 5,000, plus trade receivable, which is 11,000, divided by trade payable, which is 60,000. So when we add this 50,000 which will give us 66,000 divided by 60,000, which would give me 1,1. Then you put 1. This is your final answer. Then we head on to D, which they want quick ratio. So which is, let me just write it, quick ratio. So how you actually find the quick ratio is by saying current assets minus stock divided by current liabilities. So we had found just use our working, we had found the current assets. The current assets, the total of it was 66,000. 66,000 we subtract minus, we always subtract the closing stock, the one that we subtract. So the closing stock is 50,000. Then we divided by current liabilities. We already know it's as trade payables, which is 60,000. So 66,000 minus 50,000 divided by 60,000. So this should give you 0.2721. You put them in like this form and you actually get it right. Then we head on to our next one, which is net profit. What is the condition? Net profit if expenses are 2% of sales. So let's first find the expenses for us to get this one. So the expenses will be 2% of the sales. So that's going to be how much? 2 times 300,000 divided by 100, which is going to be 6,000. So now to find the net profit, we'll say net profit is equals to gross profit minus expenses. So net profit is equals to, we had found our gross profit, which was 60,000, minus the expenses, which is 6,000, which will give us a total of 60,000 minus 6,000, 54,000 was our net profit. It's done. That's how the ratios are done. Thank you very much for watching. If you like the video, please like and subscribe guys, please, for more content like this.